Hello everyone. So today is 23rd June and today we had weekly expiry. So let's discuss what happened during the expiry and also let's discuss what we can do tomorrow. But for tomorrow, as we can see that the EOD data has still not arrived, so that hasn't been uploaded. Okay, so as soon as it gets uploaded, I'll post the EOD data analysis on Twitter. So for today, you see that FIIs has sold for 2300, almost 2319 crores, and DII is also bought for 2438 crores. So DIIs are just trying to support the market. And so talking about today morning, so what was happening is in the morning heavy put writing was being done, but if you see the score in the morning, the score jumped, but then the score was not increasing much. Okay, though the gap was increasing. Okay, the score, as you can see, it was decreasing, the gap was increasing, and finally the score dropped, and also Nifty had to drop. In Bank Nifty also, if you see, the same thing, the score was dropping, but the Bank Nifty was not dropping, but finally Bank Nifty dropped and followed the score. And at the end, if you want to see that here, the score from here suddenly jumped from the oversold region. It jumped and then again came down and then again jumped. So here also same for Nifty. If you can see, the score here came and then it straight away jumped, and there was a jump in Nifty. And all the updates during the market hours, I have also shared them on Twitter. You can go and check. So everything, like from time to time, I have updated on Twitter. That is what is actually happening. So two things you must remember. That is learn first of all, how would you learn to do analysis like I do? So if you have seen that, many of the traders have made huge losses today, and some of the traders have also posted on Twitter that they would not be trading until unless they recovered their loss or whatever. So as I told you even yesterday, that is, if during this time there is an up move, there is put short going on, whatever you see, don't go for it. That would be a temporary win, but if you lose, you will lose big. I told you that, not even in the yesterday's video, I told you repeatedly the same thing from the last 2 months. Okay, and specifically in the last 1 month. So I told you that this is not, so it's not like you have to take always you have to take any trade. Okay, so you have to understand that during these highly volatile markets, how you have to be safe, and trading is a skill. Okay, so you have to develop it and you have to be patient. If you see that, okay, put shorts is happening and huge put shorts is happening, so everyone can see that huge put shorts is happening, so everyone will go for it, and that's the trap. When everyone goes for it, so big players just does the opposite thing. So in the morning, yes, of course, put short was going on, and then when the retail traders went for the put short, so the big players started buying. Okay, and then they took it down, and then they made profits. Now when Nifty was at around 15,400, there was two options. That is the loss that the big players are making in their put shorts. So either Nifty or Bank Nifty, the index would go up and their loss would neutralize, and when it was down, they are booking profits in their put buyings, and then they would take it up, and so that their put short positions profits get neutralized. That is, either they would be in profit in some positions and some positions it would be lost. Overall they would manage their loss, or they would be even in profit. So that could be one of the strategy, and the other strategy could have been, that is, when Nifty was at around 15,400, they would have closed when it was coming down by 200 points. They would have closed most of their positions, and then they would have taken the index further down, so that the loss they have made in their put shorts, that could be recovered from the put buyings. So these were the two strategies that could have been done. Okay, and that's why when it was at 15,400, we detected the reversal when Nifty was above 15,600. Okay, came down by 200 points. Then these two things could have happened, so either up or down. So that's why I left the market, because 200 points was enough for me and for my members, and I clearly told on Twitter that I won't take any more trades for the day. And that's how you should go, and you should be disciplined. And this last move that came was because of the put shots. Now that was done in the morning. Also, let me tell you one thing, that is from the last 2 months you would have seen that on these expiry days sudden huge spikes are coming. So what is the reason for that? So most retail traders, they think that since on the expiry day the option premium would go to zero, and they are very clever that they would take position and eat all the premiums which they think of themselves, and they mostly come on Thursdays to trade, because they think that they would take short positions and the premium would go to zero and they would be surely profitable, and they would again leave the market and come on next Thursday or next expiry. Okay, and they would be overall profitable. So on these Thursdays you would have seen that a huge crowd is appearing in the option chain, or a huge crowd is coming for the option chain, and so these huge spikes are getting formed. Okay, so on Fridays or some other days I have seen that relatively trading is simpler. Okay, so before 2 months I didn't trade on Fridays, because on Fridays anything could have happened, the data, because after the expiry day there wasn't much data. But nowadays I'm seeing that on Fridays the trade is getting very easier to take, or it's getting very easier to predict. Okay, but on Thursdays the market remains hugely volatile, and it goes either in one direction, it would totally go, or it would give spikes in both the directions, so that from every direction the retail traders would be in loss. Okay, so that's what is happening, and you can't do anything about it. You have to be disciplined. And like today, though I told my members that put shorts were happening, huge put shorts were happening in the morning, I did not go for it. I waited for, if there was some there wasn't any reversal, I would have taken any trade. So you have to be disciplined. Okay, but yes, if you notice that here Nifty, you see, I already told you that 15,647 would act as resistance, and you see it went near to that, and then this is acting as resistance, and it came down, and 15,352 would be acting as support. So these levels are working very nicely. If this level would have got broken, then I would have thought about it. And even similarly for Bank Nifty, 33,208, you see how nicely this is acting as resistance. So you have to watch for these levels, and even I saw that the scores were not increasing, though Nifty went near to its resistance level. So I was expecting that there would be some reversal. And I also noted that the IV on the call side in the morning, at around here when the score was decreasing, the IV was decreasing, and on the put side, just before the reversal I am talking about, and on the put side the IV was not decreasing. The IV was going a little higher and then decreasing again, a little going higher, but overall it was not decreasing from its initial position. So that gave me a signal that yes, reversal was near, and that's why when I saw that yes, the reversal is coming, so I took it. Okay, so that's the thing. So for tomorrow also, what you can do is you can check for this resistance level, okay, or even you can go above 16,000 and take call short positions. Here also you can go above 34,500 and take call short positions, and take those as positional trades. And if the levels are broken, the resistance levels are broken, then only close them, because if 15,647 is broken, then only close those positions. Otherwise, just take them as positional trades, and that would be the strategy. And I would update the end of the day data analysis on Twitter. And that's it for today. So thanks for watching, and keep learning and trade safely. See you in the next one.